All right, so we are on section 7. It's a new section. It's going to lead to chapter 1, and it says this section has 2 chapters. So we'll read the quote by Albert Schweitzer. The greatest discovery of any generation is that human beings can alter their lives by altering the attitudes of their minds. Section 7, building your wealth, securing financial freedom the easy and simple way by letting your corporate tax savings work for you automatically, by C.W. Allen. Chapter 1, we're going to talk about grow rich, 1, 2, 3. Point 1, learn the rule of 72. Point 2, apply the rule of 72. Point 3, watch your wealth grow. And in chapter 2, figure your fortune by using your tax savings and the rule of 72. And at that point, your 7-step plan. So here we are, chapter 1, grow rich, 1, 2, 3. Same points. Learn the rule of 72, apply the rule of 72, and watch your wealth grow. Case study 26, Eric, Sunshine, Holly, and Sam. Eric retired a millionaire at the age of 60. He incorporated his struggling little business when he was just 23. He learned all he could about money management and investments. No matter how tight money was, he invested $2,000 a year from the money he was saving on paying taxes in business as a corporation rather than as a sole proprietorship. His plan was to do this for 7 years, let the money accumulate, and at age 60 retire a millionaire. He carried out his plan of investing $2,000 for each year from age 23 to 30. His investment totaled $14,000. He never touched his savings until retirement. By age 60, his $14,000 had turned into $1 million. Was he exceptionally smart? No. He found out about the rule of 72 and applied it to his savings. At retirement, he enjoyed a life of affluence. Everyone who starts saving at a young age should be able to do the same. Sunshine heard about Eric's retirement plan. She wanted to do the same. The only difference was that she was 30. She invested $2,000 a year for the next 30 years. That's a total of $60,000 invested. A very substantial investment. She too retired at 60 with $1 million. Why did it take her 30 years and $60,000 to end up with the same amount of money? You'll see as we progress. Holly was a financial genius. When she turned 21, she took her first $1,000 tax savings from her incorporated business and put it to work for her during the next 40 years. Guess where her retirement was from that investment, which she kept at the highest rate, about 18% she could find. Anyway, guess what her retirement was from that investment, which she kept at the highest rate she could find. She turned 1,000 into 16 million. Not bad, right? How could this be? You'll see when we review the rule of 72. People always said that everything she touched turned to gold. Her friends saw her in one new Porsche after another, a couple of trips around the world, skiing in the Alps, deep sea diving off the coast of Australia at least once a year, and on, but she had money smarts, and she was not going to waste it all, even though she had her 1,000 active investment. Deep sea diving, skiing, trips around the world. She structured her business wisely. Yes, she had a corporation and she saved a lot on taxes. All her dollars from tax savings she committed to good sound investments. She had $6 million from investing her tax savings over the years and was going strong. No financial worries for her. Holly enjoyed life. What a way to live. Sam never did start investing. He was a brilliant entrepreneur. He made lots of money, spent lots, lost lots, and ended up at 60 broke. You've got it right. He never did incorporate his business. He never kept good records. He never developed an accounting system that worked. He was always in trouble with the IRS, and he never protected his assets. You've got it right. He never saved a dime, even though he had heard about the rule of 72. No, at 60, Sam was not affluent, just sad, working hard at odd jobs just to survive while trying desperately to start another business without any money. Key points. Incorporate so you can take advantage of the lower corporate tax and spend money before taxes. Invest your tax savings at a good rate from 10% to 50% consistently. Invest your tax savings at a good rate. Everything you save from incorporating. Invest with the rule of 72 in mind and in practice. How can you grow rich on your tax savings? What do the above stories have to do with you? They simply exemplify how you can use the tax savings you get by running your business as a corporation rather than as a sole proprietorship or general partnership, and investing some of your tax savings the smart way. It's only saying to invest 10% or 50% of it consistently. And in the case of Sam, obviously an example of what not to do. This section will show you only one way to wealth. It is simply taking some of your tax savings, investing it wisely, and over time watching the rule of 72 work for you. This is by no means the only way to secure financial freedom. There are many. This section is not intended to give you a course in investment and savings. So it says this section is not intended to give you a course in investment and savings. A good accountant and financial planner can help you with that. There is no one way to riches. Each person's fortune must be planned individually for that person, but a quick look at one simple strategy, one financial rule, the rule of 72, will do a lot to open your mind to the possibilities. Granted, most of you are not 21 and do not have 40 years to let money ride and roll over and over and over, but sooner is always better than later. Letting your money work for you rather than you working for money is a rich person's way to more riches. Let it be yours too and your children's way. Just think of it, your children have time in their favor, so consider applying the rule of 72 to their lives and see what a gift you can leave them. Okay, you ask, what is the rule of 72 and what can it do for me? How to grow rich to gain the freedom that you need, want, deserve. Once you apply the golden tax secrets and other tax codes you have reviewed earlier, you need to consider how you can gain financial freedom by investing some of your tax savings each year. The process is very simple. You understand the rewards when you understand the rule of 72. The rule of 72, in quotes, eighth wonder of the world, end quotes. First point, take the interest rate you are getting on your investment. Divide it into the number 72. So take the interest rate you are getting on your investment, divide it into the number 72. The answer equal the number of years it takes for your money to double. Let's use 6%, 12%, and 18% interest rates. So here's a quote by Emmett Fox. Whatever you steadfastly direct your attention to will come into your life and dominate it. How to apply the rule of 72. First point, determine the amount of money you wish to invest each year. Determine the rate of interest you wish to receive. Determine the number of years you intend to let your investment grow. If you invest just $2,000 for 7 years from age 23 to age 30, your $14,000 investment at 15% will turn into more than $1 million by the time you reach 65. Consider the possibilities if the investment was made at birth. $2,000 a year is 5.48, so $2,000 a year is $5.48 per day. Think of it this way. That's free money from tax savings, but even if it were not, that $5.48 a day is one Coke, one cup of coffee, one candy bar, one ice cream, or frozen yogurt a day, or playing 5 video games. Incredible, isn't it? How much money do we waste all the time? How much do we spend wisely? How much do we contribute to a good cause? How much do we save? Rule of 72, interest over time, worksheet. Let's take a moment and do some figuring. Record different interest rates, 5%, 10%, 12%, 15%, 18%. Record the sum of money you wish to invest, 1,000, 10,000. Record the number of years, 10, 20, 30, 40, you wish to invest. See the vast difference time and interest rate make. See the vast difference time and interest rate make. So here's a little chart. Amount of saving over years on lump sum investments of blank. So rule of 72. Compare investment over time at various interest rates. Do you think rich people know about the rule of 72? Do you think banks know about the rule of 72? Do you think credit card firms know about the rule of 72? Do you think insurance firms know about the rule of 72? Do you think they all apply the rule of 72? Yes, of course they do. Why shouldn't you apply the rule of 72? You can and will prosper. If you're not in the habit of saving, it is hard to start. But if you incorporate your business Instead of running it as a sole proprietorship, then you are giving yourself a gift of 15.3% in tax savings from the self-employment tax alone. Or if you have a hobby, turn it into a side business. You don't have to quit your regular job, incorporate the business. Follow the guidelines in this book and you will save on taxes. Then take the tax savings, invest and apply the rule of 72 to them. And take the tax savings, invest and apply the rule of 72 to them. By using this simple principle, you are merely doing what the rich are doing and have been doing all along. This is the basis of wealth building. There are only 4 principles that the rich use to get rich and richer. You can use them too. 4 founding principles of getting rich and staying rich. Number 1, go into business for yourself and incorporate your business. Number 2, spend first, tax later by operating as a corporation. 3, own nothing, control everything, all your assets protected. Number 4, use the magic of compound interest. Apply the rules of 72. Applying the 4 founding principles of the rich to get rich and grow richer year after year. Follow these steps. Number 1, go into business for yourself and incorporate your business to take advantage of lower corporate taxes, and you will get by with a lower personal income. You have more money in your pocket and more money for savings. So number 1 again, go into business. I was thinking about my daughter. I know she's going to watch every single video I ever posted, and I just feel so good that I'm able to give her this information. That's pretty much why I'm doing it above all. So number 1, go into business for yourself and incorporate your business to take advantage of lower corporate taxes, and you will get by with a lower personal income. Yet have more money in your pocket and more money for savings. It's like putting all your money into your corporation, you know. Number 2, you can spend first by taking benefits that are deductions to your corporation and paid with pre-tax dollars. Number 3, your corporation or corporations owns everything, and yet you actually control everything. Your assets are protected and you can pass them on to those you choose without cost. Number 4, you invest your tax savings at a good rate of interest over time. Rule of 72. It's great to know what to do. Now, how do you do it? The best service in the world won't do you much good unless it comes from people who are willing to do whatever it takes to make sure every detail is covered for you. Meaning your accountant. So here's a quote by the mastermind. The common denominator of success and happiness. The common denominator of success and happiness is other people. Here's another quote. Love your client. C.W. Allen. So, getting the individual help you need. So often we speak with individuals such as yourself who hesitate on moving forward because of the concern of what happens after you set up a business structure. There can be a lot of new information, things to do, and perhaps you feel like you're loading yourself up with a lot of extra paperwork and you're already busy in a complex life. Who is going to help you run it? Answer your questions that right now. Who is going to help you run it? Answer your questions that right now you're not even sure what questions to ask and still show you have to So who's going to help you run it? Answer your questions that right now you're not even sure what questions to ask and still show you how to maximize the benefits of the entity far into the future. Do this for me. I would like for you right now to clear your mind, and together let's think about the process of building a house. First, we have picked out a beautiful piece of land with a gorgeous view that holds so much promise and potential. You can't wait to begin the process of creating your ideal home. This piece represents your ideas, your dreams, and your goals. Next, we lay the foundation. It must be strong and made of mortar and stone. With careful planning, we have designed this foundation to support everything else that must follow. Visualize that this foundation represents the business structure we need to form. The same foundation any successful business will need to start, or perhaps merely to secure the progress of a going concern. The third step is the construction of the wood frame, the very infrastructure that supports the walls and the roof. Think of this phase as the creation of the articles, the bylaws, or operational agreements that define the very essence of the entity you need to create. Now we'll add the windows and doors to represent your outlook, your direction, a magnificent golden horizon. And finally, we add you and your family. You represent the players, the shareholders, officers, directors, members, or partners sitting in this beautiful and comfortable home, crafted and designed to your exact specifications. has been built to provide the mental and financial security that represents the essence, the very heart of the entire project. Of course, it took time. Of course, it took time to put all of this together, yet the end result is exactly what you envisioned. You did it. You built it. Now go forward and do what you do best. Realize the dream. Now let me ask you this. When you visualized the construction of this home, did you see yourself building it alone, without any help or guidance? I want you to know the relationship you develop with Sage is an opportunity to work with very talented and knowledgeable individuals who will literally hold your hand through the entire process before, during, and after the entity is formed. And we work very hard to provide you with continuing information and educational opportunities. In fact, that's exactly the reason why we have an 800 number, so that we're always available to answer your questions, send you additional information when you need it, or simply to let you know what's new. I'm proud to be part of a team that takes the time to listen, makes effort to define your exact needs, and then follows through every step of the way to make sure the entire process is easy and simple to understand. We enjoy being a part of your growth and prosperity, hearing the success stories associated with so many of our clients, and knowing that we were able to offer a helping hand along the way. C.W. Allen, President and CEO. It makes me happy because, this is my martyrship to my daughter. Like, this is information she's gonna pass on. Like, this is like, me and my own family have made fun of me for reading, but this is something I know she's gonna grasp at a young age, and I feel she's gonna find her purpose, and it's just gonna be good for her and her mother, because her daughter's gonna be a success, and it makes me proud, even if I die tomorrow or I die early, this information is gonna be passed on to her, hopefully. Again, I've been doubting the Lord, but I say God willing. If you have a profitable home state enterprise, you may want to consider multiple corporate strategies as indicated in the special supplement of this book. When you use the tax code to maximize your profits and apply the rule of 72 to your tax savings, then you can experience the freedom you need, want, and deserve. As visionary of your enterprise, you have chosen well to gain the understanding this book has to offer. I trust at this stage of your reading that your mind has been opened and your wealth-building horizons have expanded. As you are moving closer to the last few pages of reading, I want to remind you that corporations and the concepts presented throughout these chapters are merely tools. You, as a visionary, are now equipped with the knowledge of using these tools. It is up to you to act now while the tools are sharp and ready to craft a splendid masterpiece. Let me encourage you to press on, as you now have a very special opportunity to create a new, exciting, and extraordinary experience in your life, an experience in which rivers of enriching abundance can flow if you and only you act on your vision. Conclusion: incorporate so you can take advantage of the lower corporate tax rates and spend before taxes. Invest your tax savings at a good rate of return from 10% to 15% consistently. Invest with the rule of 72 in mind and in practice. Explore other ways to make your money work for you. Use expert help when structuring your business entities with thoughts of now and the future. So that was the end of Section 7, Chapter 1.